Chase, welcome to the show.
Thank you for having me.
Yeah, extremely happy to have you on. So, first off, why don't you tell me a little bit about your accounting firm, Insogna CPA?
Yeah, Insogna CPA, we've started in 2011. We have a team of 20 people currently, mainly focused on accounting and taxes, kind of split the house. But we started our firm kind of bridging the gap between if you have a bookkeeper and you have a tax CPA, those never are incentivized to talk to each other. So that was our main focus initially. And we've been pretty agnostic on clients, but we've been doing Amazon. I've been doing online sellers since the late 2000s,
Hmm.
but my firm's been focusing on it since 2011 officially. And so we're very experienced in it. And then our business is agnostic as far as other business types, from your one owner consultants to 7, 8 figure businesses. Don't do restaurants, don't do construction accounting because those are different accountings, but pretty agnostic on everything else and a heavy focus on e-com here.
Yeah, and that's definitely why we're here today. And you cover all levels of business in terms of, LLC, S corp, incorporated, that sort of thing as well.
Yeah, that's correct. I mean, usually kind of the first initial conversation is what's the formation? Is it tax efficient? We kind of have that initial conversation and then make sure going forward it's the right thing for our clients.
Great. So, how large is your team specifically?
Yeah, team of 20 people. Pretty
Cool.
much half accounting, half tax, and multiple CPAs on the team here, and then everybody's certified or licensed in some way or form.
hmm No, that's great.
And so one of the things we promote is always working with a licensed CPA firm when you're doing business, when you have a business or rental property, because there's recourse for the CPA firm. Most people don't realize if you're just working with an unlicensed bookkeeper or unlicensed tax preparer, they can easily walk away. You can never get your data. If it's years down the road, you're trying to find it, you may never find them to get it. Whereas CPAs, most people don't realize, are obviously licensed by the state board. Even if I were to pass away, for example, the state board has a team of volunteers of CPAs to come into my business and make sure my clients are taken care of as a licensed CPA. So that's one of the things we like to promote and educate people on, is the difference. And so whether it's us or someone else, we're always promoting the CPA profession because there is recourse in your business and making sure things are done correctly.
And you said that all of your team members are licensed as well, correct?
Licensed or certified.
Okay.
Accounting obviously isn't CPAs, but
Sure.
they're certified in QuickBooks or A2X or something like that.
Got you. So what are some of the more specific services that your firm provides to clients or can potentially provide?
It's on a kind of baseline level. We're doing monthly accounting and reconciling the books, data entering every 1 to 3 business days, reconciling when the statements drop. What we have in-house is kind of in-house controller, and kind of taking it to the next level with data analysis, fractional CFO type stuff, where that's promoted out in the sphere, I call it. And so budget forecasts for larger clients, sometimes we're checking in weekly with AP and AR and cash flow. Usually it's like monthly, quarterly, semi-annually, just depends on the size of the client. But in-house controller and her team, creates a video. We send a link with a unique URL to your customized dashboard with KPIs and financials that you can click on your phone. So we're always embracing technology and trying to find the most efficient way. And the biggest thing for us is communication. I've always pushed it since day one. And so, we use Slack, we use other forms of communication to try and make it easier on our clients and communicate as much as possible. And good thing about having 20 people is it's not, a one owner firm where it's all relying on me to respond back. If somebody has questions, one of my team members can easily help answer it for them. Or, if it's more higher level kind of business, analysis and like looking 5 years out, that's kind of my specialty. Or talking about investments, I manage my own portfolio. So that
Hmm.
conversation. So it depends on the technicality of what team members talking about what, but in general, you're getting communicated back in 1 to 2 business days at most, once you ask your question. So that's what we try to do best. And sometimes, we make mistakes, but in general, we're communicating as quickly as possible.
So you're the big picture guys is kind of what I'm hearing you say.
Yeah, I am now.
Yeah.
It wasn't like that for the first 5 or 6 years, but
Hmm.
today I am.
There you go. So your firm isn't just designed to be as you've mentioned, a bookkeeper or an accountant, but to actually help e-commerce brands with growth strategy and to maximize that financial potential. How involved is your team typically with your e-commerce clients, and what does that strategy generally look like?
And I mean, obviously onboarding, we're getting to know our new clients. What are their goals?
Hmm.
Sometimes it's a lifestyle and they just, want to sell a few products. Sometimes it's looking to exit a brand. Sometimes it's looking to grow a arbitraging business,
Hmm.
e-com. So it varies the gamuts, but in general, we're, getting to know our clients initially, what are their goals, and then kind of structuring the conversations, structuring, future check-ins and analysis and KPIs based off those goals that clients want to reach. And then if we, kind of on a business consulting side, people describe me as, whether it's talking to our controller and me in house, more if there's resources that we're hearing from you that we know are coming down the line, then we'll say, hey, you be thinking about this, let's contact so and so that we recommend, to get them in the picture. But a lot of times business owners are focused on day to day, and they have a goal but they don't really understand what's going to happen in a
Hmm.
year, 3 years from now. That's kind of what our white paper is on our website, with the 4 phases of what we see in most e-com businesses. And so what does that look like? When you're selling 50 grand, right now, that can easily scale up to a 250,000, or year 3 you'll be doing 5 or 750 if your business is scaling quickly. So you can't be selling out of your garage at that point, unless you're just
Yep.
sending it all to Amazon. So commercial space, hiring people, you're not going to be fulfilling all those packages yourself. So just kind of quickly understanding those goals, and then matching with referrals or recommendations based off that.
And at what stage in a company or client's growth should um, they consider hiring a CPA? Is that earlier than people would expect, later than people would expect?
I would say in year one, even if you're doing 50, 100K,
Hmm.
a CPA is important just from a tax perspective to make sure you're capturing all your deductions properly. But if your expertise is not accounting, and you're wasting time spending unnecessary hours doing it versus growing your business, or maybe you have a W-2 job and you're doing e-com at the same time, that's where CPA firm like us can help come in and just do accounting. The important part is if you don't do it early and you wait till later, it's very difficult and costly to catch all that up.
Mm.
Um, and so what you don't want to do is get behind the curve, because at some point when you're selling, you're doing 50 now, and then a year or two, maybe you're doing 150, 250, 300. Like that becomes a lot of volume to catch up with, and get financials caught up, and cost you more money at the end of the day to do that.
Hmm.
And then inventory is obviously number one biggest issue with all of our ecom clients. Um, you know, Most of them manage it in Excel initially, which is fine. But as you're scaling, and if you're doing multiple channels, that becomes a big problem very quickly. And what most people don't realize is that when you get to that point of needing inventory software, you're already beyond trying to fix it,
Yeah.
because you can't just flip a switch from day X to day Y and say, oh, let's turn on the inventory count and
Mhm.
manage all of this with software. And so you've got to have a period, and it's very cumbersome to try and get that implemented, because you're constantly selling product at the same time. And so what is the inventory count on day Y that you're going to make the switch? And when you got in transit and you've got inventory in multiple shops, maybe, or stores, and then in your warehouse. So it becomes very challenging quickly on inventory if you're scaling like that. So we recommend, inventory, thinking about it, investing in the right software for your
Mhm.
business very early on, even before using QuickBooks Online, looking at inventory software if you're looking to scale transactions, because that's going to be your number one challenge in the future.
Have you had personal experience coming into I don't know, a client trying to hire you to fix their financials that they were putting on the back burner for the last 2 or 3 years, and you had to come in and try to fix it? Or have you had one experience like that and said, I'm never doing that again?
All of my statements are based off 20+ years of experience.
Sure.
So, I mean, I can't even count the number of businesses we go back multiple years and fix things. So,
Oh my gosh.
that's kind of, our unique perspective is, we're basing this off many years of history and been doing it a long time. So that's why we can generally foresee what's going to happen on the
Mhm.
roadmap, where most business owners are just kind of looking in the short term and
Mhm.
trying to match their goals there.
Now, one of the services that you also offer is a virtual CFO to companies or e-commerce brands. Can you walk me through that process a little bit?
Yeah, so I mean, just kind of philosophically, the marketplace, you go on Google and you search fractional CFO. Most of these people are basically doing in what I consider like controller type services,
Sure.
budget forecast. Some are even reconciling books. Um, you know, Most of the time it's pretty much controller level advising. These are all the things that we do on a weekly, monthly, quarterly basis with our clients on a controller level. Fractional CFO, in my opinion, is more like debt and equity service, where you have a larger business and a CFO is helping find financing, external financing, or maybe you're looking to exit M&A transaction, a merger and acquisition transaction to somebody else. That's where kind of fractional CFO services can come into play. So we do market, the controller fractional CFO because that's what Google search is promoting to people. But
Mhm.
from an accounting profession perspective, majority of the time it's just advisory services,
So,
which
so
is what
not
we're doing every day.
yeah, not to cut you off, but what I'm kind of hearing you say is that people are looking for a CFO, not knowing that they actually need a controller, which is also a service that you offer.
That's correct. Yeah, and
Okay,
usually they're overpaying, for quote fractional CFO,
sure.
because that's not generally what is needed early on. I mean, you should be doing in the seven figures at least before you even consider a fractional CFO. Even if you're, your own brand or you're just
Mhm.
arbitraging and looking to sell to a third party. I mean, a typical fractional CFO, that's where they should come into play. Other than that, a CPA, accounting firm, maybe a controller,
Mhm.
fractional controller, or like in-house controller, like what we have, is generally what majority of businesses need in early on, 1 to 10 years type thing.
Okay. No, that's very insightful. So, how long do one of your controllers or a CFO or even you as a CPA, how long do they usually stay with the client? Is that until they get their own CPA or CFO, or what's that look like?
Um, a good question. I mean, we've had businesses grow and exit. We just had one sell to Sony.
Oh,
That was
wow.
an e-com business, but they have sold to Sony, and they've obviously gotten a CFO on board, where that
Mhm.
makes sense, in an accounting team. So, you know, generally, I mean, what we can handle is usually under 50 million, kind of in that range, depending on what it looks like and how many employees are there. But generally, that's what we're looking at. And then obviously, if they have an in-house person that we work with, maybe
Mhm.
we're still doing the transactions, maybe they're doing the transactions and we're reconciling and tax planning. So we can be flexible and certainly recommend it when it's necessary. We're not always trying to just hold the business and you've got to use us or nothing. But we're happy that we've scaled and helped somebody grow and exit, and leave us, because we've successfully done our job at the end of the day.
Mhm. Yeah, and that's the goal is you want to be able to see them succeed and get big enough to where they don't need you. That means that exactly means that you're doing your job well. Um, with your virtual CFOs and controllers, do they have multiple clients, or how on hand is their work actually if they have multiple clients?
I'm sorry, say that again.
So your virtual CFOs, right, and your controllers that are kind of being um, sent to provide services to these specific companies, do they have multiple clients at a time, or is it kind of like one at a time?
Multiple clients. I mean,
Okay.
yeah, pretty much working with everybody here, and then it just depends on the size and the conversation and the expertise. But um, yeah, it's not one to one. I mean, generally that's not necessary, and from an accounting and tax perspective, which is why we don't do restaurants and construction,
Hmm.
because they're different. For us, accounting and taxes are the same. Whether you're a one-owner consultant or an e-com business, still the same accounting and taxes. Maybe you code things a little bit differently, and uniquely, but at
Hmm.
the end of the day, the tax planning is the same. The advisory is still the same. So we kind of have a unique business model where that's why we can be agnostic to most
Hmm.
businesses and help them, because it's the same conversations we're having all
Hmm.
day long.
And I figured as much, but they, you know what they say about assuming, at least, you know. So you've said before that, not in this conversation, but elsewhere, that I read that the number one issue the IRS takes with small businesses is not filing payroll taxes, or not filing them correctly. Is that from the IRS being extremely particular in how it needs to be done, and the expertise required to do that, or is it more ignorance on behalf of small businesses with confusion or anxiety that just kind of instills in people?
Um, yeah, I would say it's maybe a little bit of both, but
Hmm.
I mean, we use a third party for payroll services. I recommend just paying the fee and don't be cheap about it, because it's the number one issue. I mean, that's quoted by the IRS and other sources, but
Hmm.
um, you know, don't just go with a payroll service and make sure they're filing and paying it for you. A lot of times, the largest accounting service software in America. Won't name them, but their payroll service, they have different levels. And so if you get the cheap level, to quote, save money, then you're required to make sure you click the buttons and file the reports and submit the money. If you pay them more, then maybe they're submitting the forms and payments. So we don't recommend them for that, because most people get confused and they just assume they signed up and everything's taken care of. That's not always
Hmm.
the case. And then, if clients are growing, and these days, I mean, we have team members all over the country. We have clients all over the country, in all 50 states. So, if you're hiring people in other states, as a W-2 employee and you're growing, maybe you've got a shopper, or you got an admin or something that you've hired as a W-2 employee, that creates nexus in that state. And technically, you should be registered in that state. You need to create payroll numbers in that state, make sure you withhold and pay in that state. So doing that manually is never recommended. Using the right payroll
Mhm.
services and making sure they're filing and paying it for you to stay compliant.
Mhm. And you're based in Austin, Texas, but what I'm hearing you say is that you have clients in all 50 states. Are there significant differences in tax laws state by state? I imagine there are, and I don't know if turning this broader, do you work with anyone internationally where you can say the same thing? I mean, what are some of those differences in tax laws that you have to personally be responsible for?
Yeah, we CPAs are allowed to file in all 50 states. A lot of people
Hmm.
don't realize that. So we don't have to be registered in all 50 states. There's reciprocity. So we're licensed in Texas, but we're allowed to file in all 50.
Cool.
Um, and so, yes, there are nuances here and there. I mean, sales tax is a big issue, obviously, these days with e-com. And then, are you selling enough to meet the revenue thresholds where you need to register and file as a business in that state?
Hmm.
So that can be an issue. Um, and then payroll registration is an issue with Nexus. And then once you have Nexus, you then need to keep track in class coding those transactions in QuickBooks online. Um, so you can pull a P&L by class and show by state, because then when you file taxes, you've got to know, for example, if you're in California, selling in California, you've got to know how much income and expenses are related to California to know what your California income tax liability is.
Hmm.
So that becomes important to make sure we're on top of that in class coding. Um, but other than that, obviously there's jurisdictions here and there, like everybody, a lot of New York and California moved to Austin, so we have a lot of clients from the coast. And so New York, it has city tax, state tax filings that we're aware of, and I know Ohio has local jurisdictions that we file there too. So other than income taxes, for us it's mostly straightforward. It's just making sure we
Gotcha.
tax plan correctly going into December 31st.
Hmm. No, absolutely. And um, how do you ensure more specifically? I mean, this is a little bit more of a tax out question, but um, it's constantly kind of like shifting and evolving a little bit. How do you ensure that you're staying totally up to date on all these different laws state by state or even internationally? I mean, again, e-commerce is a business that is operating a little bit without borders. So how do you, and it is, the rules and regulations for it are consistently being changed and evolved, and it's not exactly the Wild West like it once was, but it's still not as regulated, I think, as it could be or will be in due time. How do you ensure that you're staying up to date on those sort of regulations, rules, and laws?
Yeah, so my tax team, for example, I mean, we got back in January from tax CPE updates, continuing education. So we're always staying on top of what's coming out, or what's Congress is talking about, what's the
Okay.
new laws passed.
Hmm.
We don't really get in. We don't do international taxes. Now we will do. If you're selling on Amazon internationally, we will help U.S. clients with those and sync them in with A2X, and track those
Okay.
transactions. But because obviously U.S. you have to report worldwide income anyways. Um, but we're not filing Canadian taxes or European taxes. I'm aware of it. I know what needs to be done, and who you need to referrals to contact, but we don't get an international tax.
Hmm. Got you. I appreciate the insight. You've also mentioned, at least on your website, that building wealth while building your business. How is that different than what most business owners already do?
So kind of a philosophical statement that I like to make is most business owners in 20 plus years I've been studying entrepreneurship, they most of them are always reinvesting in their business and trying to grow it. And they're like, well, I'll wait to sell, or I'll wait to, 20 years and then I'll cash out, or money will be there when I'm ready to retire or
Hmm.
quit. And, generally that's just it never happens. If somebody's trying to sell their business in general, you're never going to get the blood, sweat, and tears you put into it over that course of time that you think you deserve. And what I don't want to do is, and what I do with myself personally, is I don't want to be at the end of that rope in 10, 20 plus years, whatever that looks like, and not have any money without having to somebody give it to me. So building wealth as you grow, that's kind of what we promote here, about whether it's saving $500 or 5,000 or 50,000 plus annually. Just put something away, whether it's an IRA, whether it's a SEP IRA, whether it's a 401k. Just save something annually while you're growing it, because you won't recognize that lump sum of money in the year you're making it, but over time, as it grows and compounds,
Hmm.
you'll at least have something to fall back on. And so that's what we're kind of promoting in a wealth building. And then beyond that, like especially ecom clients, when they're arbitraging or buying inventory, or just paying bills in general, or I'm like a self-proclaimed like points of miles person, so we're always promoting the right credit cards, whether you want cash back or you want to travel first class and stay in five-star hotels like I do worldwide when I vacation, using the right cards to do that, and moving points around to pay for things. So that's these are kind of different tools that most professionals don't get into, CPAs at least, and we're trying to make sure our clients are on track for it. So we're always pushing for savings. America in general has a savings problem.
Hmm.
Whenever you read the stats and look at Congress testimony, and so we're trying to change the way people think and make sure pay their spouse, pay their kids correctly, pay themselves correctly, and save correctly for the future.
Hmm. And what one thing baked in there that you said is that when a company is pretty much settling to sell their company down the road, that money will be there down the road, right? So why is that less common nowadays? I mean, that was a pretty traditional model for a long time, is build a business then sell it. So what happened between them and now where that doesn't really work as much?
I'm not going to say it doesn't work, but there's a lot of faucets that go into selling a business and somebody willing to buy it at the price you want to sell it for. Are you merging into a larger organization where you're still going to have to work 3 to 5 years under contract? We had a client sell to SC Johnson for 8 figures, and they once you have that money in your account, you are not really motivated like you were before to
Sure.
continue working. So it's different. So they were stuck in a 3-year agreement with built-in bonuses. So you're not going to get that lump sum day one. You're going to have to earn it, and you're going to have to stay on track with the numbers, basically. And it's not just here's a check. I think a lot of people have a fallacy of watching Shark Tank and thinking, oh, I get to build a product, and Shark Tank writes me a check and bam, I'm successful. I mean, that's like
It's that easy.
the statistics. I mean, we have a number of Shark Tank clients too. The statistics on there, I think it's over 75% of people don't even get funded on Shark Tank that are on the show.
Hmm.
So, most of those people don't even get money. And so that fallacy is not there. So, my philosophy, and just as an example of how I run my business. So I'm not waiting till the end of the rope in year 20 or 30, or dying at my desk like most CPAs do. Um, because I don't know what that money looks like. In general, professional services, 1 to 3x on gross revenue, and then you have to earn it out over a number of years working for whoever acquires you. So over that time, my philosophy is to continue saving money every year and letting that compound. So at the end of the day, I have options. I can sell
Mhm.
my business as a bonus because I have enough money to live on now. I can, sell it to my employees. I can let it continue running, or I could just not care and just close it, and I still have money to live on.
Mhm.
And that's really what we're trying to promote, is have options at the end of the day, not be pigeonholed into, if I don't sell this business, I'm going to have to find a job with somebody else. That's not a position you ever want to be in. Now, flips, the other spectrum of that is you're building a brand. Yes, if you're building a brand, selling your own product, obviously there's a lot of investment that goes into that. Usually 5, 10 years, you're
Mhm.
looking to get acquired, depending on what you're selling. So there is a larger multiple on those. And if that's the goal, then that's what we're trying to work you to. Marketing, sales, make sure those things are in place too properly. That all requires investment, cash flow. So saving can be a little bit tricky. And building a brand, can, like our client that made 8 figures and earned it out over 3 years, can be a windfall of money, but that's not always the case with everybody.
Mhm.
And sometimes you get lucky, sometimes you got to keep working harder. So
Mhm.
take control of your own finances, take control of your own future, and save money for yourself and your future as you earn it, is what my philosophy is anyway.
Yeah, and honestly, since you bring up Shark Tank, that I think that philosophy has a lot of validity because even when I watch that show, people will get an offer. Well, I think I'm an idiot, but I think is a good offer, and they don't like it as much. That they're not willing to sell because they put that blood, sweat, and tears in the stuff that you mentioned, and the number's too low for them, and the stake is too high. So more often than not, I see them getting an offer that they're like, no, that's not what I'm looking for, because they value that side of things so much. So I think this wealth building model and philosophy makes a lot of sense. I mean, from my limited experience, seeing that it has some validity to it. So kind of to circle back to the IRS a little bit, everyone wants to essentially pay them the least amount of money possible, right? So what are some strategies and tips for tax season, which is here and even more around the corner for myself, that you recommend to your clients that are an e-commerce business?
Yeah, first thing is, in our initial conversations, just looking at formation. If you're, hopefully you have an LLC set up, whatever you're doing, that should be number one. Even if you're not making enough money to be an S corp, at least 100% owned LLC files as a Schedule C on your personal 1040 taxes.
Mm-hmm.
And then from there, our break even's kind of 50, 60K of net profit after expenses. And then we're looking at an S corp election, where we can save thousands of dollars in unnecessary FICA payroll taxes, by taking that same money and being an S corp. So it just depends on where your business is at and what your profits look like. And then, do you have partners? Is there equity? Is there debt? Like, obviously those come into play too. And then, do you have employees? Do you have a spouse? Do you have kids? Can they be paid in the business? Is one example we, try and
Okay.
push. And just kind of structure it that way to save a little bit of money. Obviously, you're taking that deduction now and putting it in your family's pocket. And then, if you're using tax software, which we never recommend for any business owner, or if you own rental property. I mean, I have 15 rentals myself, so you can't work in the gray area with tax software. It's black and white. So example I like to give is, if you have an e-com business and you're filing your 1040 with that Schedule C, and you report home office deduction, it generally asks for your internet in the home office. So you're going to get pennies on the dollar on that home internet, whereas the internet is required for your business. So that $800 deduction, we would put on a Schedule C. Tax software is going to put it in a home office. And that's just one small example of how CPAs can add value and maximize tax deductions in the gray area.
Mm-hmm. And I think that's a great example, Chase, is you guys can find the sum of the parts, and that's the difference maker. I think is in accounting and tax season, it is a game of details, and those details add up to become a big, massive number in savings that a software, like you're saying, might not, it is not going to be able to find it and navigate through the individuality of person to person, so I think that's extremely valid.
Yeah, and what I mean, we've been around a long time, and we have a lot of good reviews because we're not promoting to put people in things that just make us more money. Like we're not going to make an
Sure.
S corp election and charge for it if it doesn't make sense for you. And we'll tell people, if you just have a basic 1040, use TurboTax. Like you don't need to pay us to do it. You just
Mhm.
have W-2 and a mortgage. And so we're pretty honest with people, and we're looking for the right clients where we can add value. But if where I was going with that is, yeah, we're charging for our expertise, but what we're charging you is still saving you money at the end of the day, in total income tax liability.
Mhm.
So we might make an S corp recommendation for 2022, a late election, or starting this year, and file taxes. And yeah, you're going to pay us money to do that, but you're still going to save X amount of dollars in total, even though you're paying us. So you got
Mhm.
to look at it from a grand perspective
Of
and say,
course.
okay, this is my tax liability. I'm going to take a little chunk of this and pay them to, let the experts save some money. And kind of think of it in that mindset. A lot of people think, well, I don't want to pay them this amount of money. I'm just going to save it. But you're actually paying more money at the end of the day because are you filing it correctly? Are you
Totally.
capturing those deductions properly? If you're doing your own taxes, that's something you got to ask yourself.
Mhm. And so to kind of give a general overview, to look to the past to try to predict the future, as you're an expert at your personal firm. I think you mentioned earlier that y'all started working with e-commerce businesses around 2011. Have you seen your firm grow in tandem with the growth of e-commerce, and do you expect that trend to continue?
It's a large vertical for us for sure. It's not, our majority of business, but
Okay.
it's a large vertical. I've been doing it since, I did it individually on my own since the early 2000s,
Mhm.
mid to late 2000s, excuse me. And then officially as a firm, 2011 is what I say. But um, no, I think the trend is continuing. I think there might be a little bit of consolidation going into a potential recession, in the
Mhm.
next couple of years that the market's identifying. But um, it's the easiest way to start it and build a brand, versus going to a traditional model where you had like a SC Johnson or a larger corporation try and start your brand for you. I mean, you pretty much can just go on Amazon and pay for some advertising and get people to buy it and get some reviews, and it's off to the charts from there. So I think it's going to be around and it's going to continue building itself in the future. And I think we'll see some consolidation of some larger e-com businesses merging and creating some efficiencies there. And some of these, before interest rates skyrocketed, a lot of the M&A firms were rolling up these companies, but I don't see that happening as often these days because the interest rates are too high for the debt service. But it's going to be around for a long time. So we're here to help when people want our help, and we'll still be here when, if you don't want it now, we'll still be here later. We're not looking to go anywhere. I'm not looking to go anywhere. Our business has been here 11 plus years. We'll be here another 11 plus years. And we just look to keep helping entrepreneurs grow.
That's amazing. I always end the show with the same question. Essentially, in e-commerce, in the e-commerce industry, CEOs, founders, people like yourself are operating on a higher work level than most, I think. And so to promote like a stable mental health and a healthy, work-life harmony, what do you do with your free time in terms of hobbies and interests?
For me, it's travel. So,
Oh, cool.
I use the right credit cards to travel. First class. I like first class, business class, and best hotels. So I kind of follow the industry and get the right points and miles that I need. And but for me, my chi is traveling, and the journey is 50% of it for me, because it's an experience that I would never pay cash for, like flying Emirates A380 first class. I'm never going to pay 30 grand for that, but I'll use points for it for sure, and take a shower on board. And but for me, that's half the journey, and then the destination's the other half. So I just enjoy travel. I enjoy different experiences, different cultures, learning different things, and that's what makes me rich at the end of the day is travel.
That's amazing. Chase, I really appreciate your time and good luck.
Thank you for having me.